Fundamentals for the underlying midstream space remain very strong. We have a very favorable commodity backdrop, which is encouraging producers to increase production volumes, while the demand for these volumes remain very strong as well. This flow of volumes is leading to very high asset utilization for the midstream energy space, higher fees, higher rates, and multiple opportunities for new project development. It is estimated that the U.S. recently produced 11.6 million barrels per day, surpassing Russia as the largest global producer of crude oil in the entire world. The U.S. is also producing record amounts of natural gas and natural gas liquids. This is happening at the same time where international demand for U.S. sourced hydrocarbons is also reaching new highs. This is a huge opportunity for the midstream sector because the midstream sector is providing that critical link for the flow and the movement of volumes from the basin, from the producers, to both domestic and international customers. The structural simplification of the midstream sector has not gone smoothly, but considerable progress has been made over the last 2 years. In fact, in the fourth quarter of 2018 alone, we've had another 5 simplification transactions made. Including these, we estimate that 90% of the midstream market cap space no longer has an economic general partner or incentive distribution rights. So the structural distractions are coming to an end, which allows the end investor to focus on the very positive underlying fundamentals for the midstream space. These corporate reorganizations are a very positive trend for the sector. It results in a cleaner, more simpler structure with better aligned corporate governance, lower cost of capital, increased self-funding, and a renewed focus on absolute per unit returns. We've run scenario analysis for all of our portfolio holdings, and from a balance sheet and financing perspective, we feel very comfortable these companies are well positioned for a steady and predictable increase in rates. Also, the move towards simplification for these structures only reaffirms that thesis. Alternatively, from an investor asset allocation perspective, we believe that the midstream sector could actually stand to benefit from an increase in rates. Historically, these companies have traded with a much higher correlation to underlying energy fundamentals, and unlike other yield-oriented asset classes, less correlation to rising rates or the risk-free yield. Therefore, as rates rise and the energy sector continues to improve, as we believe it will, you could see investors look to rotate into the midstream asset class with its cheaper valuations, much higher yields, and less correlation to rates.